Good morning, it's Jeffrey Cohen. It's June 14th. The market's about to open, and we're going to talk about, is this really a bear market? Are we just a market in transition, things like higher interest rates? Or is it just summer doldrums with low liquidity and, those types of things? So we're going to talk about the markets today, and we're going to just try to figure this out. So obviously, we can't deny the fact that the markets are down. Markets are down, right? We run our model. We ran it last night. And let me show you. Markets are really down, right? So, a couple things that are important. Through the 13th, which was last night, the S&P 500 variance is 1.45, but not quite 1.5. Times 10 to the negative 4. So the S&P 500 variance is slowly ticking up. The S&P 500 return is down 10.5%. Now that excludes dividends. Dividends was 1.3%. So you've lost 9% on your money. IWM, this is really whatever you want to define it, a bear market, a collapse. Small caps are down 26%. Down 25% if you include the dividends they paid. The QQQ, down 19%. If you include dividends, down 18%. So the QQQ versus a year ago is almost down 20%. One more bad day, and you're looking at, I guess, what they would call a bear market. Now, the definition of a bear market, we have a different definition. Okay, so I want to share this with you. This is our down run. The definition of a bear market, people say, is when prices fall 20% from recent highs amid widespread pessimism and negative investor sentiment. I'm not sure I buy it. I say you're down 20% from the average of where everyone bought it last year. That's bear. The second is it's down 20% from the absolute level inclusive of dividends from last year. Then you're in a bear market. But actually, when you look at charting, a bear market's different even still. A bear market would be lower lows. So if I were to take a look at the S&P chart right now, and we'll do a daily chart, let's do a weekly chart for 5 years. I'm going to clear the drawing because that's a little distracting. So you can see how the market went up. This is in 2018, and then it corrected. We survived the 2018. It wasn't that bad. Then you see 2018 and 2019, it dropped. Went up, it dropped. This was the COVID crash. Went up, and now it's like slowly working its way down. But what we want to focus on is this here at the end. You have a low. It's closing low, not just the little hammer handle, right? It's closing low. It's closing low, closing low. So you've got lower lows. It's a bad sign. 3 lower lows in a row, and you're in a downturn. Are there lower highs? Well, this is where it gets interesting because there's the high. You don't really have. Here's a higher high. So as of March, you were still trying to fight for a lower. It was a lower high, right? And a lower high. So yeah, you're in a down market. You may need some more volume confirmation, but I would say the S&P 500 is definitely trading lower, and that's the one that hasn't fallen as much as the others. So stocks were down. How bad was it? Let's take a look at FinViz, and I've got some pictures that I saved. This is important. These are the kind of metrics we look at, right? So the market actually opened and stayed pretty solid through the day, and then in the afternoon it just collapsed. So advancers to declines was 543 advancers, 7,800 decliners. There were 58 new highs and 2,700 new lows in stocks. And if you look at this chart, you see it's pretty much all red with a few just very minor exceptions of stocks that went up. McDonald's went up. CME Group went up for the exchanges. That kind of makes sense. Truist Financial Corp. I looked at Truist. Truist did not make our naughty list. Truist made our nice list. Conservative. Nicely run. So I can get that. Not much else. What's this? Oh, Duke Realty. I have no knowledge of Duke Realty. So, yeah, it's fine. So nothing really went up. So let's take a look at some other things. This is important to me. I actually made you some pictures. So we're just going to go right to the pictures. So first off, these are the results of our up run. For those who want to get in there. Oh my God, Jeff, what does this mean? So what it means is best up portfolio is 6 stocks. High momentum. If the market were to turn around this morning, these stocks are going to scream higher together. You hold them together. The edge is less than 5.0 times 10 to the negative 4. It's a very small edge right now. These edges have been much larger. So small edge, right? And so Dillard's. I don't know what Melly is. I never even really looked at it. Nvidia, Silvergate, SI Time, Trade Desk. If you want a slightly larger portfolio, you add in Coinbase, Lending Corporation, MXL, Surgery Tech, a bunch of other stuff you can add in there. Apps. AOSL is a semiconductor company. SYNA, I think it's Synaptics. So you could still be at 4.4 times 10 to the negative 4 edge with a larger portfolio of 13 stocks. Here's the thing, though. If the S&P falls, these guys are going to fall fast. If the S&P's going up, they're going to go up fast. So our CQNS up run is probably a set of stocks to short if you knew the market was going to fall today. Now, nobody knows, but it's just so interesting, right? So I'm looking at this as like you can play this with a hedge against the S&P. I find it fascinating. Every day we run it. So let's take a look. We already shared with you new highs, new lows. We already shared with you, and you can see it here, the picture of the market yesterday. Yesterday was a widespread market decline. Okay. It's interesting. What else, Jeffrey? Well, Bitcoin, you can't really say it's recovering this morning, but Bitcoin's at $22,353. Remember, the support level for Bitcoin was 30,000. This thing fell out of bed. That is bad for the not what I would call the edgy kind of people, the people that want to believe in a new world order. Well, it's hard to believe in a new world order when it drops $7,500 in like 2 days. That just sounds like a scam, right? Euro, dollar, 104.38. Okay. Dollar Canada at 129, actually kind of holding its own. Little stronger, of course. The US dollar to the Japanese yen, not stronger. About the same, although these are historic high levels. Crude stayed about the same at 122. See, you would think if the market was collapsing because there was a depression, because people were out of work, they were starving, the price of crude goes down to $30. Okay, no one's driving their car. No one's loading up a truckload of goods. No one's doing anything, right? But that's not the case. We have an active economy. It's just that the price of oil and the price of gasoline is really high. My wife just went to work this morning. People are working. It's just that. So now the Federal Reserve is trying to fix things. And I just posted a tweet. I thought it was quite clever. I might share it with you. So the Fed paints pictures, castles in the sky or sand castles. The market determines long bond yields. So your 30-year bond is nothing to do with what our president or our central banks or our Congress people say. That 30-year bond at 133.53 has broken through major support. It was 137.53 a week ago. Okay? It's at 133.53. The 30-year bond has fallen through the floor. So what you should take away from this is that there's no support for long-term interest rates. And if you are an investor, there's no support for your bond fund. It fell. Now, it's up a point. It's nice, great. It was 132. That's like the barn doors open and somebody finally closed it, right? 10-year notes at 115.78. 117 was the support level we saw. I would say it's also a bit of a collapse. And so I find this really interesting because it says long rates are going up. And I have another chart to show you that shows you long rates are going up. Now, here's your indices. And something important to share is that, the U.S. equity indices look like they're doing fine. This was taken this morning at 6 a.m. Central, so 7:08 Eastern. Euro stocks were down. DAX was down. I think I looked. The CAC 40 was down. Belgium was down. Europe's down. But Asia flat to down. The VIX is up. Makes sense the VIX is up. But as we talked about, the S&P 500 index, the spider variance, is not up that much. It's not even up a tick today. So the VIX up at 3280 reflects fear. It reflects people not wanting to execute your trades. We tried to buy a bunch of puts yesterday. We put in orders and some of them were right at the market on 10 different puts. Not one executed. We had to short a stock in order to get any negative exposure. So the VIX being higher reflects fear. It reflects nervousness. It may not reflect the math, which I find interesting. We did have a 3 standard deviation day yesterday, though. So we were at, if you had 1,000 days, 4 years of trading, this would have been like one of 3 of the worst days in 4 years. It was a really bad day yesterday. I was teaching my daughter about standard deviations, that's why. So gold's about flat. Silver's down maybe 50 cents. No big deal. Platinum I don't really follow. Copper's holding its own. So this is not an economic collapse. This is a financial collapse. Okay? Of course, I just find this funny. Yahoo Finance, buy the dip. It only works if you buy the dip, right? Don't buy the dip. Not today. Don't buy the dip today. Just listen to me. Don't do it. Don't buy the dip. How did bonds do? Mr. Cohen, talk to me about fixed income. I love hearing about fixed income. It makes me excited when you talk about bonds. Well, I love fixed income. I love bonds. You should be very focused on this, right? Bonds come before stocks in liquidation preference. So this is corporate bonds. This is yesterday. This is FINRA Morningstar. Advancers to decline. 633 issues advanced. 8,000 declined. New highs, new lows. 14 fixed income investments went up. Corporate. 6,858 went down. This was a wholesale sell-off of debt. Now, I have some friends on Twitter that were talking about Avaya and how Avaya is going to refinance its debt. It's going to be all better now. Yeah. I checked, by the way. Avaya debt, worth less today than it was yesterday. Oh, look. Yields are up to 13% on 1-year money. 13% on 5-year money. 6-year money, right? Don't tell me anything. The problem with this market is baby, bathwater, it doesn't matter. It's all going, right? High yield, for every 1 that went up, it looks like 9 went down. Convertibles, for every 1 that went up, it looks like 12 went down. So fixed income was bad. How are we doing on the government fixed income, right? So I like to look at agency securities because it's things like, a lot of this is mortgage related, although these are not mortgage-backed securities, but this is agency debt, right? Fannie Mae, Freddie Mac, Federal Home Loan Bank. There's probably a farm bank in there somewhere, but they don't show it. So advancers to declines looks like it was 12-1. 12 declines for every advancer. New highs, new lows. We're starting to see, almost 300 new lows of agency paper versus 4 new highs. Fixed income is no place to hide right now. So Jeffrey, why is that? Tell me about this Federal Reserve painting pictures. I like that. That actually is a nice imagery right there. The first thing I'm going to show you is I'm going to show you yields this morning. I think this is what's driving the market. 30-year Treasury bond right now. Sorry, excuse me 1 second. It's going to be like 105 degrees today. So, 30-year Treasury bonds are yielding 3.35%. That's high. We look at that over a month, and you see it was below 3% not long ago. So you're up 0.5%. So mortgages are going to go up. Long-term bonds, right, are going to go. So the value of bonds goes down when the yield goes up. So it's interesting, right? So if the United States wanted to buy back its bonds, they're cheaper now. It's not a bad thing. So when the Fed is starting to taper, it could just decide to make open market transactions and buy bonds, and they're cheaper. In fact, if this yield were to go to, let's say, 4 or 5%, you destroy the housing market. But the federal government can buy back $1 trillion worth of bonds and probably save $100 million. It's just another way to look at it. But for you and me, if you're like a 401k investor, your bond fund is no place to hide. That's what this is saying. And this is risk-free treasuries. Now imagine you have a company's bonds, Avaya, IBM, General Electric, Apple, Hitachi, whatever, right? Those bonds are going to be worth less because these bonds are worth less. Look at the 10-year. The 10-year is like the currency, right? Because people do a lot of things. They use it for collateral. And so your 10-year note is trading the same thing, 3.35%. Not as high as earlier this morning, but if you look at it over the month, it was down at 2.75. So it's up, right? We look at 1 year, which is more like a daily kind of, how I'm going to manage things. Here at 1.2, I remember when it was 0.7, 0.5, 0.7, then 0.9. This thing just keeps going up. So every day use of money is getting more expensive. So, all right, that's interesting. Let's take a look at major indices, futures right now, and where major indices stopped trading yesterday. Let's make this bigger so you can see it. So the S&P, these are not futures, these are indices. So this is where things closed. So S&P 500 dropped almost 4%. NASDAQ dropped 4.7%. The Amex dropped almost 3%. The Russell 2000, which is small cap, dropped 4.8%. UK dropped under 1%. Another UK. Germany dropped less than 1%. France dropped over 1%. Euronext dropped about 1%. Belgium dropped about 1%, 1.5%. The Nikkei was down 1.3% last night. China's up. China doesn't see this as a problem. China's actually doing okay, right? Aussie down almost 4%. Jakarta, I love the Jakarta market. Indonesia, that's up almost 1%. So New Zealand down. So things were down. So what this tells you is Asia is not catching the cold that you and I got yesterday in the market. So China, relatively speaking, richer today than it was yesterday. Just something to think about. Currency. This is interesting too. You know, I love the currencies now. I'm learning a lot from it, right? So 104.53 for the euro dollar. Okay, Jeff. 134.54. That's an increase. So more, the dollar buys more Japanese yen, a stronger dollar. But take a look here at the Chinese currency. 6.73. It actually declined. So the Chinese currency strengthened against the U.S. dollar. So a flight to quality to China. It's not a big one, though. It's not a big one. But if you take a look, let's say over a year, you can see that China has devalued their currency or allowed their currency to become weaker. Now, China sets guardrails on their currency. So they decide how much it would be or is allowed to trade. So when China does this, when it goes from 6.3 to 6.7, you counteract inflation. You counteract shipping costs. And so China is making sure that it can sell its products in the world market by squeezing the profit margins of its own companies, making them more efficient, making them meaner and leaner. And you know when the market turns around, those companies are going to show, healthy profits and rising prices. So this is a way for the Chinese government and the Chinese market to force China to keep exporting and to stay affordable despite inflationary pressures. This is a gift to the Western world. I'm not sure this gift will keep on giving, but it's just interesting, right? Makes sense, though. Let's look at it over 5 days. You can see just pumping up that the number of renminbi that you get per dollar, right? So now I want to look at some other stuff. This was interesting, Jeff. You told us what happened. Let's take a look at what's going on in some of these indices you follow. So this is high beta stocks. These are the stocks that you want to be in if you think the market's going up. So if you believe the futures, up 0.42, up 0.6, pardon the interruption, up 0.1. Oh, Jeff, I love it. Market's going to go sky high today. So you want to be in high beta stocks because high beta stocks move with the market. The problem is that when the market goes down, they drop 20%, 15%. You lost a fortune. Now, unless you were in puts, betting against high beta stocks. The good news is high beta stocks stay high beta for a while. Now, some of them you couldn't act on, like View was short sale restricted a couple days ago, but like Silvergate, yeah, you could have acted on it. Down 17% in a day. That's real money you could have made. So that's high beta stocks. So high beta stocks were down yesterday. Party City, though, held its own, which I thought was interesting. I guess there's only so much you can do, right? So let's take a look, though, pre-market. That's really the kicker for me. Where are we pre-market on high beta stocks? A bunch of them are down. But other than like Coinbase and MicroStrategy, well, okay. The top 5 have to do with Bitcoin. So once you take out the Bitcoin stocks, high beta stocks aren't really moving. In fact, more to the upside than the downside. That's interesting. So that means people are starting to make some positive bets this morning. You notice how I wore a green shirt. The market is speaking. It's green, okay? Let's take a look at money managers. Money managers are your canary in a coal mine. A couple went down, 5. By the way, Cohen and Company has some mark-to-market risk because they hold assets on their books. But in general, the private equity, private investments, the market maker, Charles Schwab, all looking good this morning. Okay, let's go back to chips and semiconductors, right? Chips and dips, just who's got the salsa. They're up. Market is looking green this morning. Can't believe I'm saying it. Now, trucking and transport. Let's look yesterday. Yesterday, trucking and transport was terrible. People were screaming for the exits. right? Look at that. I mean, yellow trucking down 8%. I don't get it. Now, I know they probably don't have big profit margins, and gas went up, and diesel went up, and all that. But you could buy yellow trucking for like $165 million. Oof, it just makes me shiver. Is it going to go bankrupt? You do have your your rail companies as well. I mean, everything fell. Canadian Rail, CSX, over the road stuff, and okay. So transport was bad yesterday. Where are we at with transports today? Pre-market is more green than red. So gasoline at 409. Crude oil at 121.6. It's not like it got much better. So that's interesting. So things look a little more healthy this morning. Now let's look at specialty, retail, and furniture. Yesterday, did anything go up? Oh my. Yeah. Abercrombie and Fitch went up 1%. And VF Corporation, which is Vanity Fair Corporation, which is clothing. A lot of names that you don't recognize. It's Vanity Fair. Stayed flat. Everything else dropped. So, okay. So that's a recession bet yesterday. What about today? I don't know. I'm actually looking with you, right? So yeah, BJ's is down 5%. Container Store, Best Buy is down. That's fine. You know what? I looked at Target because everyone talked about how they're going to have big sales. Over the weekend, Target, pretty much every TV in the Target by my house was on sale. It was a beautiful 75-inch TV, 4K, for like $800. It was down $300. It was great. But retail looks strong today. Look at that. And the dog names, Q-Rate, GrowGen, Wayfair, Macy's, they all look up today. People are Hydrofarm, TJX, Hanes Brands has been beaten down, new low. Who can afford a $25 bra from Hanes when the economy's bad? But I guess it's going to be an uplifting market today. Hanes Brands is up 2%. So that's what we got. It's okay. Looks like a good day today. So let's take one last look at something. So I want to share with you, these are the best stocks that our model picks. Best ones. Hard to see. Let's see if I can make it bigger for you. This is like inside baseball, so I'm just going to show you some stuff. I feel it's nice. It's green because it's up. Header rows, I know there's only one header row. Header columns, I know there's 3. Freeze the header columns. Let's take a look. Total inside baseball, I hope you appreciate it. This is $750. Well, plus the run, plus all the insight, plus the volatility and variance data, plus your leptokurtic, platykurtic stocks, plus your skewness, plus your combination of portfolios to hold, up and down. All right, so Nvidia. What I find interesting about Nvidia is Nvidia still the number one behaving stock in our model because risk return. But when you look at Nvidia, it's unbelievably badly performing. So if we do a full screen on Nvidia and we look at it over 5 years, look at that. Pump to 306, 315, 329. And it's back down to 156. Now the good news is, if you bought it at 40 or 50, you're still making a lot of money. And you still got dividends. But Nvidia is way down in this. So the question is, why would this stock show up well? Well, the reason is that it went up when the market went up. And it's going down when the market goes down. It is a follower of the market. It doesn't mean it's a good deal. It just means that if the market were to scream higher, Nvidia probably screams with it just because of past performance. Then the S&P 500 is the second best performing stock in our model. We threw in like one ETF just to compare. Lattice Semiconductor, LSCC. That's another one to look at. LSCC. It's the only other stock that has a negative CQNS score. Same thing. This was a $5 stock. Screamed higher to 80, 75, and now has come all the way down. So Lattice Semiconductor, not so great. So, but because in the past it went up and down with the market, you could look forward and say, well, maybe it'll go up or down with the market. Not sure I'm buying that right now, right? I think you just got to cut your risk. And then other stocks that have been like this, right? That have been poorly performing, right? Up when the market went up, down when the market went down. Apple, Microsoft, Carlyle Group, Ameriprise, T. Rowe Price, BlackRock, Blackstone, Intuit, Alphabet. These are stocks you know. Broadcom, Raymond James, Berkshire Hathaway. So the way I look at this is, if you want to be McDonald's, if you want to be in stocks that did well when the market went up, but did not do well when the market went down, therefore they might do well when the market goes up again, then you see it. It's tech, it's money managers, semiconductors. And what did I show you this morning? I showed you this morning, for some reason, people are optimistic, right? Money managers. 5 are down, most are up. So this is where you want to put your fast money, right? What was the other one? Tech. Chips and dips, chips and semiconductors. None are down. All are up or flat. So that's where you want to be, right? You know, and I don't have the tech in here, but I'm guessing it's just the same, right? So it just shows you how to think about the market. So I want to thank you for listening. We, unfortunately, are not paid to make videos, and we're not paid to update our website. So our channel got 429 views. We have 295 subscribers. For us to ever get any money and get any kind of fame and fortune from YouTube, you have to have 1,000 subscribers. So we're 295. We're doing this. It's God's work. We do better when we share our thinking with you. But it sure would help if you hit the subscribe button, because then YouTube shares our videos more broadly and more people see it. It doesn't cost you any money to do it. It helps. And if you watch a video, leave a comment down below. Hit the like button. It really helps us. We also maintain our website. And so we maintain a ton of info. It's free. Under investment information, you can see we post all the negative stocks that our model picks. The top dividend stocks, leptokurtic, platykurtic, and we don't modify this. This comes straight from our runs. Usually it's like a day or two before. All your high and low beta stocks, your positive and negative skew stocks, stocks that have fallen dramatically in price and volume spikes, stocks that split this year. We share all of this on our website for you so that you can look for stocks that you might want to research. We also post research. Not only do we post our blog posts, but sometimes we talk about meme stocks. We have a whole ongoing theme about variance of the different market indices and how you would think about variance or risk versus return. We have some liquidity research that we were doing. So there's a lot of stuff out here that we post for free. So the only thing I guess I ask you is check out the website. Don't buy anything unless you really want to. That's not what this is about. But like the YouTube video, maybe share a tweet. We do tweet a lot. And so here's our Twitter page, Chicago Quantum. Markets are rational. Just use your head and follow what you think is right. You may be the only one who sees it. Have courage. And I post different things, right? A lot of times I post the videos. In case you missed it, this week's videos are earlier in the morning. And then you would see it, I got 1 like, right? No one's really looking. Although, I guess 4 engagements, that's kind of nice. But you take a look. Click on the link. Check out a video. That was me yesterday in my Highway to Hell shirt. You know, we don't edit. We say what's on our mind, right? People like our tweets. So check it out. It's Chicago Quantum. And hope you enjoyed the video. Hope you found some value. And good luck in the markets today. Bye-bye now.